Shifting over to aluminum, I like charts. If you can't tell, if you haven't been able to notice that over the last year and a half that we've been doing this, I love to look at charts. I think charts tell a very interesting psychology story about markets. And so with that, I also enjoy technical analysis, which basically just means drawing lines onto a chart. But this one jumped out particularly fascinating to me, which is, this is a 5-year chart of LME aluminum. You can see that about 2 months ago, I think it was 2 months to the day, we hit record high prices of about $1.75 on just the LME ingot portion. We have come off fairly swiftly from that on a couple things. One, I would say, is certainly rising interest rates, or the fear of rising interest rates, is going to act as a headwind. A lockdown China is going to have an obvious headwind on the price of aluminum, because you're taking out a big piece of the demand side of the equation. But interestingly enough, when you draw in this trend line, which I love doing, we are still in an upward trend with regards to LME ingot prices. And I think it's going to be a very interesting next couple of days, couple of weeks, because as I mentioned, some equity markets right now and some broader markets globally are experiencing quite a bit of volatility. It'll be interesting to see if aluminum can hold up above this trend line. If it does, it may suggest further constructive support for prices. And I would say, I don't think this is too much of a reach. Certainly, if China reopens its economy, opens up its cities, gets back to demanding the things that they traditionally demand, I would expect that this chart to remain relatively supportive. But we'll see. We'll see. There's quite a bit of quite a bit of noise going on in broader markets at the moment.
Nick, that's a little bit of that drop has occurred like over what, the past 2 weeks, we'll call it?
So it's actually 2 months. So that all-time high was March, I think it was March 5th of 2022. So it's still very quick though. It's been a very swift move.
So one of our attendees are asking about, have you seen a drop even in the past few weeks from that, or is it just part of the trend over the last 2 months?
Yeah, no, I would say if anything, it's sped up in the last week or two, along with a lot of other risk assets, equity markets, things like that, because they're all somewhat correlated to some degree. But yeah, it's been, I mean, this is all very fresh data. So yeah, this is, I would say the last 2 weeks, we've probably seen 10 to 15 cents come out of the price of LME. Now, on the flip side, Midwest premiums are remaining stubbornly high, basically right up near record levels. And I think Harbor actually put out, which is a subscription aluminum company for research, they put out a note just yesterday or 2 days ago suggesting that the Midwest premiums are in the physical market are going through upwards of 40, I think it was 42, 43 cents, which again, that's a record high level. And unfortunately, one of the contributors to that is what we're looking at here, which is the price of diesel fuel. I know we had Elizabeth Efta on to talk freight markets last month. If anything, things have just gotten crazier within the diesel fuel market. You can see it here in this chart. We're talking about a lot of different regions of the United States with diesel prices above $6 a gallon, which that's going to feed through to, moving things around more expensive, manufacturing things more expensive. It's really kind of it's a rising tide lifts all boats. I've heard diesel fuel referred to as the workforce or the workhorse of the manufacturing economy, and right now it's getting more expensive very quickly. So a lot of the things we talked about on the energy side are certainly going to be very applicable within diesel fuel. So what that means for Midwest premiums is getting ingot into the Midwestern portion of the United States is getting more difficult, and it's getting more expensive.